Well, the Aussie high, how much higher can it go? There are a lot of noise on the internet websites, investment websites, about the bull run ending globally. Well, is it? How should you be thinking about your portfolio in turbulent times? We're not times not turbulent. Anyway, giving us his views now is Tristan Hanson. He is head of asset allocation at Ashburton Investments. Tristan, what's top of mind for you at the moment? Were you looking particularly at emerging markets?
Well, I mean, we manage global portfolios. Emerging markets are, well, as we know, a growing share of that, more than 50% of world GDP nowadays. I think there's various things to try and work out what's happening, really, because we've got a shift in terms of monetary policy likely later in the year in the US, so that's one factor that's likely to weigh on emerging markets. Second factor is just the fundamental growth outlook and dynamics of various countries. We've already seen the IMF, for example, in their publication last month, talking about how trend growth is lower, not just in developed markets, but also in emerging markets. And you see a number of countries where trend growth is a lot lower now than where it used to be. So China's a classic example, but then obviously others like Brazil, Russia, India would be an example of a country where we'd be more hopeful going forwards, where actually we should see a pickup in growth going forwards in our view. So it's very interesting because one, in a way, doesn't really want to talk about emerging markets as a group.
Yeah.
You need to look at individual countries and what's happening in those countries.
And of course, India, when we start looking within the group, seems to have stepped out of the group and says and said that I'm going to outshine this particular grouping. Is this the best market to be looking for if you were to compare emerging markets in terms of earnings potentials and opportunities? Is India the place to be?
Yeah, I mean, I think out of the big emerging market countries, I would agree with that actually. And now's an interesting opportunity because Indian equities, they've had a very strong run, but they've had a bit of a pullback in the last few weeks. Meanwhile, say, look at China. There's been a fantastic rally in China on hopes over monetary easing. Yeah. The underlying fundamentals are, there's plenty to be worried about on China. India, there is a much better fundamental dynamic coming through. However, I should say that Modi still has to deliver. He's been in office getting on for a year now. One still needs to see the reforms coming through to lift growth. But on the monetary side, I think policy is way better than where it was a year or two ago in India, and they've been bringing inflation down. That allows them to cut interest rates. Falling interest rates, lower inflation is a good dynamic for an economy and gives them room to grow, particularly if they can get the supply side going.
Yeah. Talking of particular countries, Australia, quite a lot of noise in the commentary on the airwaves about the rate cut. That's one country to look at and what it tells us about other things in that region. And then, of course, Greece. Nozi was saying earlier, it's back in the news. Well, it's actually never out of the news. It's just people pretend there's going to be a solution, but there isn't.
Sure. I mean, yes, Australia, we saw another rate cut today. I mean, the theme globally, actually, this year has been that while people have been worried about maybe the US raising rates at some point this year, you've seen a whole raft of interest rate cuts and further monetary stimulus from virtually every economy out there that you can think of that isn't the US. I mean, Brazil's been raising interest rates, but they're an exception. India's been cutting. QE in Japan, QE announced in Europe, cuts in Australia, and a whole host of other countries as well, cutting interest rates. So there's been monetary easing in actually most of the world this year, which should be generally supportive of growth, and we are seeing things pick up in places like Europe, but obviously that brings you back to Greece.
Yeah. So Tristan, if we take that global monetary policy play and the different dynamics, what are you advising your clients in terms of where to put their money, and what type of asset classes are you saying to them, this is what you should be getting into if you want to realize a good return?
Yeah, I think there's various principles that you want to adopt at this stage in the cycle now. So first of all, and it's a truism, don't try and kid yourself that you can predict everything that's going to happen. Lots of things happen in the world that are incredibly unpredictable. So we don't know what is going to happen with Greece. There's various scenarios, and ultimately it depends on policymakers in Europe and in Greece and what outcome they want, and whether they can negotiate some sort of outcome. So don't try and pretend that you can predict everything.
Have the markets pretended? Have they taken a view on Greece?
I think the consensus view would be that probably more of a muddle through, more of the same, some kind of last minute deal gets done and we kind of muddle through. I think if there is an actual default, another default in Greece, because they have defaulted once, then you'd see a bit more contagion in the short term. But don't try and pretend you can predict everything. And then secondly, sharpen your pencil at this point in the cycle and avoid overvalued assets. And I think the most overvalued assets, which are the ones getting hit quite hard in the last few days, is, for example, the European bond market. I mean, it's a fundamentally unattractive place to be invested at this point in time, given where yields have got to.
Commodities, we were talking about them earlier.
Absolutely.
So undervalued stuff to be had there.
We've run out of time for this interview, but I'm just going to steal a quick one. And I just want your quick comment on the currency wars that you're seeing playing out. I mean, we've been talking about dollar strength, but we saw the euro surge just about a week and a half ago, and there's lots of questions about, is this a new normal? Is that surge just a momentary surge that we're seeing? What's really happening in the currency space, and how does that impact on your portfolio?
Yeah, so things don't move in a straight line. So the dollar's been incredibly strong. We've seen a bit of a counter trend rally in some other currencies like the euro. Our base case view is that interest rates on deposit are negative in Europe, and interest rates are going to rise in America in our view. America is far further down the line in terms of bringing their economy to full employment. So we think monetary policy is going to tighten there, and ultimately the dollar is a more attractive currency to be in than the euro.
Well, there you have it. That's from Tristan Hanson from Ashburton Investments, and he's the global head of asset allocation, making sense of emerging market sentiment as well as monetary policy playing out on emerging markets and other sectors.